Journalist Michael Lewis has a new book about high-frequency trading on Wall Street called Flash Boys. And he lays out in detail this brazen new scam that's being run on everybody. Quote, "The U.S. stock market is rigged. They're able to see your order and play it against other orders in ways that you don't understand. They're able to front-run your order." So what he describes is computers that a lot of these Wall Street firms have that can recognize what kind of stocks are being bought on the market, and then in a millisecond, they can up the price of those stocks and charge you more for them before you complete your transaction or your purchase. In fact, one hedge fund manager said his firm made $300 million every year off of this trick. So what I was shocked by and what I was struck by as I'm reading through the article is the fact that they're not even trying to be clever with it anymore. You know, they're not even trying to do like a voila and cover your eyes as they get away with something. This is more of just like a way to rob you. This is more of, oh, they're about to buy that one? Okay, up the price right now. Like, it's just a quick little price gouge scheme that they're not even, they're not even doing the old clever snake oil salesman workaround where they have to pitch you some bullshit and say, well, if you give us your money, then what we'll do is we'll triple it by doing this kind of investment and that kind of investment. There's like no middleman, it's just straight to fucking you. Not even like a little bit of time to lube your ass before they jam it in. And it's crazy because when you think about this and add it to the other things that we know they did, it really paints this picture that the stereotype of the people on Wall Street is 100% correct. And it pains me to say that, but I mean, that's what the evidence shows. I mean, so to give you another example, Goldman Sachs. I mean, I can't believe this was covered, but it wasn't covered nearly enough because this is a scandal of epic proportions. What they did is, in 2007, 2006, before the Great Recession of 2008 and the subprime mortgage crisis, what they would do is they would bundle together all of these toxic assets, these subprime mortgages, and they would sell them as the bundles that they are and tell their clients, look, if you want to make a lot of money, this is where you got to invest, man. Here, buy these bundles of these subprime mortgages. They're rated AAA. That was another scam of, they would pay the companies that rate them to give them the AAA. They say, okay, here, they're rated fantastic. You'll make a bunch of money, so go ahead and buy these from us, and you're going to be very happy and not too far in the future. And then what happened? They would sell those packages, the people would buy them, and then they would turn around and bet on the products they just sold to fail. So that's a clear case of fraud. Telling someone, oh, it's great, we know it's great, and then they turn around and bet against it because they know it's a piece of shit. And then they would make money both ways. And how many people went to jail over this? One. Everybody was doing it, but one person went to jail. It was the fall guy. What's his name? The Fabulous Fab something that, there were a couple articles written about. And the only reason why he went to jail is because he was the most brazen with it. He would talk about it in the emails and just be like, yeah, I totally fucked that guy, didn't I? I made so much money. I'm so rich. So, he was the fall guy for everybody else. They totally got away with it. And, of course, they got away with it because of corruption. Because they greased the politicians, so the politicians rigged the rules in their favor. So then when we realize that they crashed the economy, you have all these lawmakers arguing, well, you could prosecute them or maybe not because that's actually technically legal according to if you look at the law books this way and that way. Anyway, you guys got more money for me so I can keep bullshitting and cover your ass? So there's that aspect of it, and there's also what Matt Taibbi talked about. Since there used to be strict rules and laws that said, look, if you're going to be an investment bank, if you're going to be a Wall Street firm, here are the rules. There were referees that say, hey, man, look, I'm the regulator. You're not allowed to do that. You're not allowed to do this. And they would be barred from going into certain industries. And the reason why they can't go into certain industries is because then there's this massive conflict of interest where they could own a certain industry. So let's say, for example, the metal industry, certain types of metal, aluminum, copper, whatever, right? And if they get involved in that industry and they're buying and selling that stuff, well, then wait a second. If you're also an investment firm, then you can bet on whether or not the price of those metals is going to increase or decrease. So that means you can rig the market because you own the company. So you could rig the market and then make money off of rigging the market. You see how this works? And by the way, that's exactly what happened when we deregulated under Bill Clinton. We got rid of Glass-Steagall. We deregulated even more under George W. Bush and all the neocons. And then this led to the Great Recession. And even today, and this was written in Matt Taibbi's article recently in Rolling Stone before he left there, one of his last articles, he basically said this is still going on to a tremendous degree. So now we know the reality. We know that there's no regulation. It's the wild, wild west. They're making money by rigging the markets. They're making money by upping your price at the last second using a computer when they can figure out how you're going to purchase, and they just up the price at the last second. They make money through all-out fraud. Every single illegal way you can imagine that somebody makes money, that's what they're doing on Wall Street.